Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, March 1st through Friday, March 5th, 2010. Well, folks, as we get started, you can see that Friday's action was quiet on the volume side on the back of a huge snowstorm that hit New York City, really shutting down Wall Street and the whole city area there. Now, a couple things to go over. Last week was a wild week, and I want to cover all the technicals from last week. I also want to talk about a couple stocks that I want you to watch this week going into it, thinking that you will get some possible gains by either shorting them or going long them this current week as swing trades. So again, we're going to try to cover as much as we can on the charts, but before we do that, I just want to touch base on the little disparity that we're seeing in Wall Street versus Main Street. Now, every so often I've talked about this, and it seems to be connecting again. And what I mean by that is last week we saw continued negative data out there, all right? We had consumer confidence shocking the market. New home sales down 11.2%. Jobless claims near 500,000. Existing home sales down 7.2%, 7.1%, whatever it may be. But bottom line is, these numbers are ugly numbers, and the market for the most part last week was flattish. If we go to the 60-minute chart here on the SPY, you can see, all right, here's the 22nd. This is where we opened right here. So this is where we closed the previous Friday. We closed right around 111. And where did we close on Friday this week? At 110.74. So you were down, give or take, about 25 cents on the SPY for the whole entire week. Yet the volatility was astronomical. I mean, look at this. Monday you had a little bit of a gap up and a sell and then a rebound. Then Tuesday you sold off. Wednesday you popped back up. Thursday you gap down only to recover and go flat, and then Friday we had a flat market again. So you can see the volatility is not lacking here whatsoever, and that's nice because it's giving us that are swing traders a maximum opportunity to make money. And again, as I've said to you guys, 2010 for my premium members in the Research Center and the Intraday Stock Chat has been a year for the ages already, and it's only 2 months old. We're going to enter the third month, the end of the quarter, again at the end of this month, and looking back, it's been an unbelievable 2010, and it will continue to be that way because the volatility is not expected to change. You're going to have these type of whips in the market, and ultimately it's all about positioning yourselves to take advantage of those whips, whether it be 5% move in the market, 10% move in the market, or just 2 or 3% move in the market. We can take advantage of it. Now, looking at the charts here again, let's go back to the intraday on key levels that I want to just go over again as we discuss that kind of disparity in Main Street and Wall Street. But bottom line is, folks, you can see this trend line right under here. Beautiful little trend line sloping up right here. All right, that's going to be your little bit of a baseline support when you go into Monday, all right? Now, on the upside, this level right here at 111 to 111.05 is going to be the major resistance area on the upside. Now, you can see I highlighted that with 2 lines on the charts, and the reason I did that is just to make sure you guys are aware that 111 here to 111.5, 111.10, whatever it may be in that 111 area is a significant technical line that if the market breaches that, you're going to move up pretty significantly, probably to 111.50, 111.60 level later in the day on Monday should we get over 111, all right? So just be aware of that. I'm going to show you that on the 60-minute in a second when we go back to that 60-minute chart. Now, on the downside, if you do get through this pinkish line right here, which is an obvious technical support area, just a minor technical support though, believe it or not, if you get through that, this is where you're coming to right here. The 111.40-ish level, which is also the 200 moving average. That'll be significant support on Monday. And if you get through that, you're going to look for the 110 level, which will be a very, very key support. As you can see, a little bit of base support right here. If you go back on the charts, you can actually find other levels here. Look at this little pivot right here at 110, how you fell here and then got the bounce. That's an obvious level right there. So that's just reinforcing the fact that that 110 level will be very significant on the charts. If you get through 110, you're looking at this level right here at around 109.45, 109.50, and then ultimately to 109, which would be the base from Thursday's low. And again, Thursday was that massive dump out day where we gapped down, and then by the end of the day, because the dollar got crushed, the markets rallied all the way back. Now again, folks, this is the key. All right, we've seen that the markets overall have been resilient in the face of some ugly economic data like last week, but I want to make sure you guys are aware of it, why the reason for that is. Simply put, it's the U.S. dollar. The dollar continues to be a key player in any move. It doesn't seem to matter how bad the economic data is. If the dollar can fall after the economic data, it lifts the market right back up. And that's exactly what happened on Thursday. And I want to show you here, folks, all right? So we're going to take a look at the UUP, which is the dollar index. This is the spiders on Thursday. As you can see, a beautiful gap down, double bottom right here, bounce up into trend line, pulled back in spirit of bull flag. That told us it was going to go higher. Sure enough, you ripped up into the close. Now let's take a look at the UUP on Thursday, and it should be opposite, meaning the dollar should have started out higher and have fallen throughout the day. All right, so let's go back to Thursday. All right, here's Thursday. All right, double top. Remember the double bottom on the spiders chart? Look at the double top on Thursday, the 25th. So you have a double top here that beautifully correlates with the SPY on Thursday's double bottom. Let me go back to it right here. See, here's Thursday, double bottom, double bottom. Well, notice the double top on the UUP. All right, so UUP, if we go back to Thursday again, scan right back here, 25th, there's your double top right here to here. And then look at the failure, and the dollar just float lower all day long. What do we know about the markets? The markets rallied all day long at that point after that double bottom. So you can see that the inverse relationship continues to be key. The only time the inverse relationship sometimes disconnects is when you have options X. We saw a week ago, not this last week, but the week prior on options X week, where the dollar really didn't have much play because institutions were playing games and forcing the market this way and that way to make sure that their puts and options that the options that they sold, whether it were puts and calls, expired worthless to make maximum amount of profit. And that's just the game of options, folks. You got to know your game of options. But in any case, folks, my point is continuing here to see that as long as the dollar slowly fades throughout the day, and you can see even on Friday it faded a little bit, but then came back a little bit here. As long as it does that, it's all right and will continue to really keep this market afloat. All right, and that's the fascinating thing about it. It really is fascinating, guys. Without a doubt, fascinating stuff. Now, the 60-minute chart of the spiders, one thing I want to go over here, and we'll flip back to the SPY. We talked about the 111 level as being major resistance, and for those of you that just were listening a few minutes ago, I discussed that if you get through 111, you're going to go to 111.50 to 111.60, and that would be the next massive resistance. And I said when we flip to the 60-minute chart, I would show you, well, here's your 111 line, your yellow line. Look at your 111.50 to 111.60 level. It coincides with double top on the 19th and the 22nd. That's a Friday to Monday right there. All right, and again, that just gives you the, Monday, Friday to Tuesday, because we had Monday off for President's Day. But in any case, right there, folks, there it is. That's your key double top at 111.50 to 111.60. That would be your next target if 111 gets taken out. If that gets taken out, then you're looking at 112, and then 112.30 to 112.50 is the iron curtain on the intraday charts. On the way down, if you start to fade here, and guys, by the way, just looking at this candle right here on the SPY, not a very good candle into the close. You did see some sellers, but that was most likely people that were saying to themselves, you know what, I don't want to hold into the weekend. Too many possibilities about another country announcing, negative things based on their debt issues. Could it be another Greece? Could it be another Dubai, Spain, Italy, whatever it may be? Could that be another thing that happens, and that would drive the dollar up? And we all know when the dollar goes up, the markets would fall very drastically. So most likely this little end of the day selling was people saying, you know what, not worth it to hold it for 2 days when the markets aren't even open. I don't want to take that risk, so I'm going to unload it. But in any case, you had a little bit of selling into the close there on Friday, and that's what that exactly was. But nonetheless, if you continue to fall, this is where you're looking. 109.50, guys, 109.50, 109.60 area, 200 moving average is sloping down there as well on the 60-minute chart. That's going to be a huge area. Interestingly enough, if we flip back to the 10-minute chart, take a look at this. All right, so you have the 200 moving average coming into a level right here, but then if we scan all the way down, you can see even on the intraday you have a massive support level at 109.50 to 109.60. So 10-minute support right here, 109.50, 109.60, and if you go to the 60-minute chart, you can see that massive level right here. And why is it there? Because you have this pivot low right there, little pivot high right there, and believe it or not, if you scan back even further, and again, going all the way back here, you have this little pivot low on the 3rd of February. I mean, these levels, folks, that I have in on my charts are master levels, and they go back literally, some of these lines will go back years, if not more. Intraday, most likely, they'll go back weeks, if not months, to being key levels. All right. Now, overall, folks, we want to take a look at a couple stocks here in the last couple minutes that I want to highlight for next week, and I want you guys to be watchful of. Now, these are technically key stocks that I want you to watch for, and as we go over them, you can just watch next week and we'll see what happens. Now, my projections overall for next week looks to continue to be a generally choppy week. All right, I'm going to start to look to see if we can see a little bit of pullback in the market overall, although I think Monday we could see a little initial move up in the markets based on the fact that no new debt issues are coming out over the weekend that I've heard about yet, and that just bodes well for the futures overnight, tonight, or going into Monday morning here ahead of the open. All right, remember, anytime you have some selling going into the close because of the risk of global problems, if there's no global problems, those players will be back in the market buying it up Sunday night. It'll get a little bit of a boost. Most likely the dollar will fall because there were none of those issues, and that will push the markets up just a little bit. So that would be generally what I would expect coming into Monday. For the week overall, though, believe it or not, I expect a little bit of neutral to downside action, very possible for the week coming, and we'll continue to watch to see how that plays out. Now, last but not least, folks, as I said, a few stocks to watch. Keep an eye on Apple here, guys. Apple By the way, you have a little bit of in spirit of bullish flag pattern on Friday on the 60-minute Apple chart. If we go to the daily chart of Apple, you can see this is a very interesting place because Apple broke above the 50 moving average, but it's right into the little double top here. If Apple can get through there, you may go up to fill this gap right here at, let's see, right around 207 to 208 would probably be pretty significant resistance. And if it gets through that, Apple could go back to a double top. Overall, the long scheme of this chart, let me just draw some quick trend lines here on the chart. Let's erase that and we'll bring that over here. One thing I want you to watch over the long term, just continue to watch this little trend line here. If this ever breaks, Apple could literally dump all the way down to the 200 moving average, so watch that. Last but not least, guys, Palm. Watch Palm here, extremely oversold. I would not be surprised if from the level of 565 to 609, which is where it closed at 609, I would not be surprised to see this stock up at some point this week $1 higher than this. It may go lower first, but at some point a technical bounce should come in on Palm, and look for it to trade up above $7 in the not too distant future. Take care, folks. Enjoy your week. Come join the Research Center. Come join the chat room. We'll see you there to make some money. Take care.